Saudi Arabia's $50 billion deal with China. Consequences for BRICS and global balance of power. Saudi Arabia has taken a bold step that could upset the global balance of power. By signing a landmark $50 billion deal with China, the kingdom is clearly demonstrating its strategic interests, despite the enormous pressure the United States has recently exerted on Saudi Arabia. Washington has repeatedly tried to persuade Riyadh to stay away from China and the BRICS countries because of concerns about the geopolitical and economic impact this alliance could have on global security and America's national interests in particular. But now Saudi Arabia is making it clear that it is willing to disrupt and rethink traditional relationships. Recent agreements with Chinese financial institutions worth $50 billion show a clear intention to strengthen ties with China and move away from the one-sided dependence that has underpinned Saudi-American relations for decades. This development is not only a political move, but also a key part of the ambitious Vision 2030 plan, which aims to diversify the economy to reduce the country's dependence on oil mining. The agreements with China aim to significantly increase bilateral capital flows, including both debt and equity investments. This strategic convergence underscores the deeper economic integration between the two countries, and the relationship has been further strengthened by Saudi Arabia's growing investments in China. The role of the Public Investment Fund, PIF, is particularly important, as this fund has signed 6 major agreements with leading Chinese financial institutions totaling $50 billion. These agreements are aimed not only at boosting the flow of capital, but also at supporting investment in key sectors such as technology and infrastructure. Saudi Aramco, the state-owned oil company, has significantly expanded its investments in China and further strengthened its strategic focus on Beijing. In 2024, Aramco completed 2 major transactions to further strengthen its role as a key crude oil supplier to China. In the first transaction, Aramco acquired a 10% stake in Rongqing Petrochemical Company, Limited for approximately $3.6 billion. A long-term supply contract for PLN 48,000 barrels per day was signed with Jiangsu Eastern Xinhong Co., Ltd., one of the largest chemical refinery complexes in China. The agreements with China aim to significantly increase bilateral capital flows, including both debt and equity investments. This strategic convergence underscores the deeper economic integration between the two countries, and the relationship has been further strengthened by Saudi Arabia's growing investments in China. By the end of 2023, China's imports from Saudi Arabia had reached an impressive $64.3 billion, and trade relations continued to grow in 2024. In May 2024, China's exports to Saudi Arabia increased by 11.8% compared to the same period last year, while imports from Saudi Arabia recorded a more moderate increase of 3.51%. This continued growth underscores the strength of the economic partnership between the two countries, which is further strengthened by significant cooperation in areas such as technology, logistics, and manufacturing. Saudi Arabia also plans to further increase crude oil shipments to China in 2024 to meet the growing demand from new and expanding refineries and further strengthen its role as a key supplier to China. Another notable aspect of Saudi-Chinese cooperation is the gradual shift away from the US dollar as the dominant currency in bilateral trade. China and Saudi Arabia have stepped up their efforts to reduce their dependence on the US dollar with a landmark currency swap deal. The deal, worth around $7 billion, allows the two countries to trade in local currencies, the Chinese yuan and the Saudi rial. The agreement is valid for 3 years with an extension option and allows for the direct exchange of up to 50 billion yuan or 26 billion rial without conversion into US dollars. The move is part of a broader de-dollarization strategy aimed at reducing the dominance of the US dollar in global trade. China is actively promoting the internationalization of the yuan, and the agreement with Saudi Arabia is an important step in this direction. The currency agreement is particularly noteworthy given Saudi Arabia's status as the world's largest oil exporter and China's role as the world's largest energy consumer. By facilitating direct currency exchange, the deal enhances financial cooperation and reflects a shared interest in diversifying transactions in traditional US dollars. In addition, the agreement is a key element of the growing financial partnership between China and Saudi Arabia, which has grown significantly in recent years. It is expected to support Saudi Vision 2030, a strategic initiative aimed at reducing the kingdom's economic dependence on oil through the development of other sectors such as technology and tourism. Historically, interaction between ancient Chinese dynasties and the Arabian Peninsula was very limited and mainly took place via the Silk Road, the trade route connecting the two regions. However, official diplomatic relations between Saudi Arabia and China were only established on March 21st. It was registered in July 1990 and marked a decisive change in Saudi Arabia's foreign policy. The move enabled Saudi Arabia to diversify its international alliances beyond its traditional Western partners. In the 1990s, trade between the two countries gradually increased, initially focusing on basic commodities. At the beginning of the 21st century, however, bilateral trade expanded significantly. In 2004, the value of trade between Saudi Arabia and China amounted to around $3 billion. By 2008, this figure had grown to an impressive $25.4 billion, representing an unprecedented average annual growth rate of almost 40%. In the 2000s, relations between the two countries intensified further, mainly due to China's growing energy needs. By 2015, China had become Saudi Arabia's largest trading partner. Bilateral trade amounted to $42.3 billion in 2018 and relations continue to deepen, with the volume of trade rising to an incredible $87.3 billion in 2021. In the first quarter of 2023 alone, bilateral trade reached $24.3 billion, of which Saudi exports to China amounted to $13.7 billion. Chinese imports amounted to $10.7 billion. The energy sector remains an important part of the relationship, as Saudi Aramco has entered into several joint ventures with Chinese companies, underlining the strategic importance of the partnership. These initiatives include joint refining projects and investments in China's growing petrochemical sector, reflecting the importance of petroleum products in the relationship. One such joint venture, based in Fujian province, aims to make Saudi Aramco a major supplier of crude oil to China while meeting the country's growing demand for petroleum products. To summarize, we note that the relationship between China and Saudi Arabia is not only economic but also geopolitical. With changing global dynamics and growing competition between the US and China, unprecedented growth in trade volumes and deepening financial cooperation, this underscores that their partnership will continue to expand in the coming years. As the global economy and geopolitical alliances grow, the role of these two countries on the world stage will continue to be crucial. Thank you for staying until the end. If you like this footage, don't forget to subscribe to our channel and activate the bell so you don't miss any updates. Stay tuned, stay connected, see you in the next video.